Hi, and welcome to the Stock Scores Market Minutes for March 13th, 2017. This week's topic, amateurs open the market, pros close it. I'll then do my regular weekly market analysis before looking at the trade of the week on OCRX. All right, so amateur traders will react to news or rumors in the first hour. They'll often be emotional runs higher, which can then be followed by emotional runs lower. The true validity of the news or the rumors will be judged by the larger investors who, if they like what they hear, will accumulate the stock throughout the trading day. And that gives the stock stability into the close. Stocks that close near their high with that stability have a good potential to be strong the following day. When stocks rally sharply higher into the close, that's often a motion that will get sold into the next day. Or if stocks close well off their lows, well then those large investors weren't there to take up the slack. The trade of the week will highlight this, but first, let's get into this week's market analysis. Here's the 30-day, 60-minute chart of the S&P, and you can see that the market ran up and away from its trend line. The old rule that I talk about so often is when stocks run away from their trend line, they usually come back to it. The market bounced off of the trend line on Friday, and it has held a second test of that trend line. That's what we want to watch. As long as this trend line can hold, the short-term selling pressure that we saw for the last week should be done. Will the market move back to new highs? That's the question now. If it can move back and at least hit those highs, then it's good. If instead it makes a falling top followed by a break of that trend line, well, then you have to be concerned. The longer-term chart looks pretty healthy. We've got a long-term upward trend line. We're some distance away from that trend line, which is why I don't think we should be surprised if we see a pullback further to the trend line. But for now, there's been no breakdown, and therefore we remain long on stocks, although I do recommend some caution. On the Russell 2000, which of course is the small cap group, we can see that this little flag pattern was broken. And now we're coming back to retest support. That's not a particularly healthy thing, but we still have a rising bottom potentially. So if we can rally next week. However, you can see that the small cap stocks are not keeping up to their large cap peers. On the Canadian market, we've had some weakness in commodity stocks because the Fed is expected to raise interest rates. Raise interest rates means the US dollar goes higher, and that is negative for things like gold and oil. And we can see the weakness in the Canadian market. This is, I would say, a neutral chart because we're not in a downward trend yet. We're basically sideways over the last month. But you want to watch to see if these support zones can hold. Looking at the longer term chart, it's still healthy. We still have a long-term upward trend. We haven't broken the trend line, but we do have the potential here to break down from a little falling top. And so that's something to be watchful of. Not a concern yet long term, but certainly something to keep an eye on. On the TSX venture market, I've drawn here a 30-day, 60-minute chart, which is not something I usually do, but I really wanted to highlight how the weakness in commodities has shown itself. The TSX venture is heavily weighted in these junior commodity companies, and you can really see that sell-off that has happened because of the strength in the US dollar and just general weakness in that small cap sector. The market is more interested in buying the large cap stocks right now because of the potential tax effects of a new Trump tax plan, so on and so forth. That's the area where the money's flowing. Money seems to be flowing out of the small and micro cap stocks. On the US Treasury side, this is a 3-year weekly chart, and we were in a downward trend here. We basically came back to the trend line. Talked about this rule before. It actually didn't come quite to it. We had a little flag pattern here in the downward trend. This week we broke that, and that indicates this wants to go lower. We still haven't broken through this floor yet, so there is some support there, but I do think you have to be concerned about bond prices going lower, which means interest rates going higher. And again, lots of discussion about the Fed doing multiple interest rate raises this year, market pricing in with a high degree of certainty that there will be a rate increase in March, and you're seeing that priced in to the bond market. Now, it's a little bit interesting. The US dollar has been strong the last, call it 5 or 6 weeks, but on Friday it actually broke down a little bit, and I'm not really sure what's going on there. There was lots of discussion about the Fed raising rates, and yet the US dollar actually finished the week a little soft. So a bit peculiar. We'll see how that pans out. I don't think it's broken this little upward trend. It's come close, I suppose, but you want to keep a close eye on this because it's sort of a divergence. You know, you got all the commodities, all the bond market moving lower on the expectation of interest rate raise, and yet the US dollar didn't really show that toward the end of the week. It has shown it over the last 5 or 6 weeks, however. On to gold, and gold has broken this little flag. And again, let's go back to what we keep talking about. The market ran away from the trend line, this sharp sell-off. It come back up to the trend line, didn't quite get to it, but close. And then we broke down from a falling top. That implies lower prices ahead. Now, there is an upward trend line here, which will be a little bit of support, but you know, still we've got 2, possibly 3 weeks of downside until we get to that zone. So short term, I want you to be cautious. Longer term, it's a bit of a neutral pattern longer term, but what we ultimately want to see is, does this line get broken or does this line get broken? If it's this one, you can be bullish. If it's this one, be bearish, because we're probably going to test the lows down there. On the oil side, it's been such a sideways market for a long time. Very low volatility until this week when we actually had some selling pressure. Now, that has a lot of people saying, oh my goodness, are we going to head to new lows for oil? Well, just keep in mind that there is still pretty good support in here. We've got these support zones that have held up for some time. And so the market will bounce off of those. Whether it holds them, I don't know. But short term, expect maybe another week of weakness before we get a bounce off of those short-term support zones. And on the fear side, well, fear had a little bit of a jump mid-month last month toward the end. And we're really drifting lower again on the VIX. Complacency taking place here. If you see a sharp spike up in the VIX through that downward trend line, that's maybe indicative of some fear coming into the market, but there's really nothing there right now. So my ratings bullish on US stocks, both time frames, but you know, a little bit of caution there. We're flirting with the trend line on the short-term chart anyway. Canadian stocks still bullish long-term, neutral short-term. This is a concern because we are at the trend line, could break as soon as next week. Hasn't done it yet, so remain bullish for now. Gold bearish on both time frames. Oil neutral, longer term, bearish short term because of the breakdown this week. US stocks have broken their short term pullback. Thursday's low needs to hold for this to turn or to continue higher. Canadian stocks showing weakness as commodity prices slip lower. Oil breakdown, but it is near support, so it doesn't have tremendous downside yet. Gold appears likely to continue the long-term downward trend. Not a lot of fear in the market. All right, let's go on to the trade of the week. And this is one that I want to demonstrate what I mean by stocks that show strength in the morning and then close strong. So my action candles indicators, the pink dots, picked up on OCRX. I was, had this on my list on March 8th there, which I guess was Wednesday. And it had a day trade entry earlier, but that's not really what I want to highlight here. What I want to highlight is how the market was stable into the close. And this is a strategy I do actually called an overnight hold. Very abnormal volume, abnormal price action early, and then that stability near the high of the day into the close. And look what happened the next day. It jumped even further. That went from, just over $1 to a little over $1.80, 80% gain in one day just using that simple concept. All right, well, that has been the Stock Scores Market Minutes for March 10th or March 13th, 2017. Hope you enjoyed the video. If so, please click on that like button, subscribe to the channel, and as always, trade well.